Hello everyone, George DeSantis here with a look at the market for the week ending September 15th, 2017. As usual, let's look at the disclaimer. Trading and investing has large potential rewards and large potential risks. This video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. Consult a licensed professional investment advisor for investment advice, since I am not one. Let's begin by looking at the weekly chart of the S&P index, S&P 500. Let's begin with a weekly chart of the S&P 500 to get a sense of the longer term trend of the market. On the weekly chart last week, we saw that there was a bullish harami here, sometimes referred to as a pregnant woman. This body, the body of this candlestick, totally engulfed by the body of this candlestick. And so I pointed out that we expected a nice move up again. And of course, and so we got that. We got that nice move last week. Actually, we had a candle here that we calculated a target from, which was 2501, and we've pretty much hit that target, 2500 and 20.23. And so the next target we seem to have here is a 2522, which is a target derived from this ABCD triangle that we calculated some weeks ago, 3 or 4 weeks ago. So at the bottom of the chart here on these indicators, we can see that MACD is now trending up. Shaiken money flow continues to trend up. DMI, this is an indicator I haven't shown you before, I think, but it's directional movement index, and that is also showing us it's an uptrend. The DMI plus is above the DMI minus. And also commodity channel index continues to trend up, and RSI 12 is above the 60% line. So all in all, we have a nice uptrend on the weekly chart. Let's take a look at the daily chart. Now on the daily chart, we crunch it up a little so we can see these triangles. On the daily chart, remember we had this ABCD that I mentioned before, this triangle, and that's the target from that triangle, 2522, and then we had this smaller one, triangle, and the target was 2501. We just about hit that. We gapped up on Monday. We gapped up again on Tuesday. We consolidated those gains, and then on Friday we had a nice move again. So this market is looking pretty healthy to me. MACD histogram is still above the zero line. It's bullish, in bullish territory. Shaiken money flow, you can see that Shaiken money flow increased here last week. So there's some buying pressure. And DMI is trending up. The plus is above the minus, the green above red. And the ADX is trending up. So there's an uptrend with DMI plus above DMI minus. Williams percent R is above the 50% line, continues to show us good strength in the trend. And CCI is still above the zero line, which tells us, yeah, confirms the uptrend. RSI 12 also. So we have uptrends on both the weekly and daily charts of the S&P 500. And that gives us a picture of the bigger market, 500 stocks, right? So let's turn now to some individual stocks that we've been tracking. And before we do that, let me just remind you very quickly that this is not advice to buy or sell anything, as the disclaimer said. It's more educational for educational purposes. I might mention if I own a stock, but that doesn't mean you should go out and buy it. So let's start with some individual stocks. I'll turn to best choice for that instead of TC2000. Let's start by looking at the two ETFs on the oil market that we looked at last week, since someone asked about it. The first one here is XLE. I'm not a big fan of oil right here. However, I must tell you, although it's not obvious on this chart, there was a very bullish divergence of MACD on the weekly chart of XLE. And of course, since then, we've had this nice run up here. But the market is now overbought. It seems that XLE is overbought above the 90% line. So I'll be a little nervous here. If I bought it, I would definitely want to use stops, make sure that I don't get a big pullback and get hurt here, you know. And if we look at OIH, let's see what was going on there last week. Similar kind of thing. OIH rallied up and now it's above the 90% line. So I would say the same thing applies here. So let's stop here and look at some other stocks. Let's look at Apple, for example. Now, on Apple, on the regression channel, it's sitting at about 52.4. So it's on the middle line here. And so there's some room at the top. Apple became overbought, and now it's just about on the middle line of about 50%. So I'm holding Apple, I still have it. And let's take a look at the seasonals. On the seasonal, you may recall that at the end of the year, we usually get a nice rally. In October, we usually get a nice rally, October 7 to October 24th. So there is that. And so I'm not selling Apple here. I'm hoping for another rally from here. It pulled back a bit recently. And this one is Facebook. And we can see the extreme is 30, so there's room to grow, room at the top to hit the 90% line. And it seemed to have been consolidating this rally here. It seems to have been consolidating that rally for the last 6 or 7 weeks. However, we are now at 30%, so we should see another nice rally from there pretty soon. On the seasonals, I don't recall what we had on Facebook, but let's take a look. We usually get a nice rally in October, from October 10 to October 24th. So I have some Facebook still, I'm keeping it. Let's look at something else. And this is Visa, and as I've said many times before, it's one of my biggest holdings now, and I intend to hold it. I consider it a very good play on the retail market, even if you don't think that the brick and mortar stores are going to do very well. Visa cards are going to be used, as I mentioned before. So I like this one. And the seasonals, as we saw some time ago, tells us that we're coming into the season when Facebook, well, in February, we got a nice seasonal play here. But from September to the end of the year, we also got a nice seasonal trade between October and November. October 25th, November 8th. So let's look at another one. And here's Adobe. Adobe has that nice tight range like Visa and a few others that we've looked at. And I like that one. I bought it again and I'm going to hold it. I bought some shares, not a whole lot, but I did buy a few shares. And so I'm going to be holding that for a while. It's now at 26 on the extreme, so there's room at the top. I like this nice tight range. On the seasonals, I was waiting for pullback and we got that. On the seasonals, let's see what we have. We have a trade in March, but from September to the end of the year, we have a trade in November, a nice trade in November. 83% win percentage with a 5% profit, average profit. So I like Adobe. Let's take at something else, look at something else. And here's what Netflix looks like. A little more volatile than a few others we've looked at. So I trade this. I don't really hold it continually, but I do own it off and on. It became very oversold. It rallied here, dropped back a bit, dropped back to the 10% line, gapped up, consolidated, gapped up, moved up, consolidated, again consolidated. Can look for a move eventually up to the 90% line. And at the seasonals, we'll see what we get. In January, we get a nice trade, January 21st to February 4th. And from September on, what happens? What trade do we have? Well, in October 24th to November 8th, we get a pretty decent trade, 91% win percentage with an average profit of 7%. So Netflix is one that I have to continue to look at very seriously to get back into it. And here's a nice looking picture. This is NVIDIA, the leader in artificial intelligence, in the opinion of many the so-called experts. And last week I talked about it seemingly in a trading range here, a very tight trading range, and that it was very oversold. It was hitting the 10% line. Well, on Friday this thing went up $10.71 on Friday. Nice move. Nvidia is another stock that I like very, very much, and I've owned it off and on. I don't have much cash sitting on the sideline since I'm fully invested. So between you and I didn't really buy this because I didn't have the cash to buy it. Uh, anyway, let's take a look at something else. Oh, before we do that, look at the seasonal on Nvidia. Remember I mentioned last week that from August or so you could buy this thing. It runs all the way up into February, and then it goes flat. So this is the time of the year that I mentioned last week that you want to be buying Nvidia. Unfortunately, the bank was empty as far as cash is concerned. This is United Rentals, and last week I mentioned two stocks that are likely to benefit a lot from the hurricanes: Home Depot and United Rentals. People rent trucks to do the renovations, etc. So also mentioned that it was sort of overbought. It was overbought here up to last week, and it's still overbought. So I would buy it on a pullback, but not all the way up here. If we look at Home Depot, said the same thing about it last week. It was also very overbought. It pulled back a bit, and if it comes down closer to the 50% line, I would become more interested in buying it there. If I had any cash left, I'm fully invested, as I told you. So let's see what else we have. Now, during the week, I sent you an email with charts showing symmetrical triangles on 3M and on Johnson & Johnson. You could see the triangle here, this here, and this line here. If you drew a line here, a line here, and the target was 220. Now, it just so happens that the upper line of this chart is 218, of this 3M would be 218. So it's close to the 220. That would take us all the way to 90%. So 3M, if you have it, if you bought it, 3M is likely to hit that 220 target from this triangle here. And that means it'll take it up to the 90% line. Let's see if we have some, let's take a look at J&J, see if we find something similar. Similar kind of thing. On J&J, we had a target of 141, and if we look here, if we look at the upper extreme is 138.59. If it gets to the 90% line, it would be at 138.59. So that means that we have room to grow from 134.45 where it sits now to 138.39. So if you have 3M and J&J, look for them to go higher, I think. We'll take a look at something else. And let me introduce one more today. Very tight range. This is Align Technology, and that's a company that corrects the teeth. In other words, if you have projecting teeth or whatever. And I like Barron's had a very favorable article on Align, and you can see this very tight range. Looks a lot like Visa and MasterCard and so on. So I just mentioned that one. And we are pretty close to the end of the 15-minute period. So I'm going to call it a day and enjoy some football. And you guys have a nice rest of the Sunday. We'll talk to you again next weekend.